What's up everyone, and welcome to the Lord of the Coins. Today we'll be going over a step-by-step simplified version of order blocks. So we'll go over first what are order blocks, then we'll go over why we use order blocks, and then we'll go over how to use order blocks with an example. And generally we'll just be demystifying order block concepts and breaking a lot of retail ideas. Make sure to join the Discord, it'll be in the description below, as I'll be posting more information like this regularly, and trade ideas and callouts, etc. You'll get them a lot faster than waiting on YouTube videos. And make sure to like and subscribe if you like the content, and click the notification bell since a lot of my content will be time sensitive to the markets. So yeah, without further ado, let's dive deep into order blocks. So what are order blocks? You can think of order blocks as zones of demand or zones of liquidity with a lot of buy and sell orders. You can also look at them as shifts in momentum, since retail trades with momentum, and smart ready are usually the ones who will shift the momentum that retail will trade with. That's how I like to think of it, and yeah, that's why I believe they're really important to find pivot points in the market. So that is a very dry and simplified version, or simplified definition of what an order block is. So why use order blocks? So order blocks exist because smart money moves a lot of money. Since retail will move a couple hundred to a couple $1,000s, maybe a little bit more depending on how big of an account you have, but smart money wants to move hundreds of millions to possibly even billions of dollars. So there just isn't enough liquidity to support their buys and sells. So they use order blocks to create zones of demand where there are very high demand zones so that they can move their money. And the reason that you would want to use these as a retail trader is that they're shifts in momentum, and they're I wouldn't say they're easy to target or predict, but they give a lot of confluence to your trade, a lot of value to add to your own trading strategy. So pretty much, simply put, markets are manipulated by smart money, and you can't really beat them, so join them. That's as simple as I could put it on why we use order blocks, or why I use order blocks. Okay, so next is how to use order blocks. So first off, you want to know how to find them. And generally the idea is that if you want to find a bearish order block, something that will push the market down, is that you want to find the last up candle before a large down move. And usually it's not always just the candle. They're usually zones. So for example, in this, I'll take this white candle right here and the one right below, and I'll draw out this order block like this. And let me actually make this red. And call this a daily bearish order block. So that is how you identify a bearish order block, and vice versa. If you want to find a bullish order block, find the last down candle before a large up move. So right here, for example, this would be your daily bullish order block. And let's make that one green. So yeah, that is simply put, that's just simply how you find bearish and bullish order blocks. Next thing you want to do is find points of liquidity, and by that I mean these high wicks. So for example, right here, let's draw a line, and we'll call this BSL, which stands for buy stop liquidity. It just means that there is a zone up here with, for example, people who went short on the market, they'll put their stop losses right up here. And that's how liquidity is created. And you know, there's another one right here, and just put one right here. You can call this sell stop liquidity. This is on the bottom. Oops, I reversed the acronyms. All right. So that is how you find liquidity. And generally, what you want to see is a break of structure, a sweep of liquidity, and then a tap into an order block. So I'll show you what that means. So when you're using order blocks, generally what you want to see is a break of structure. So for example, we broke structure here. We're putting in higher lows and higher highs. Then you want to see some sort of distribution pattern right here. See these three peaks going up like this. This is known as a 3 drives pattern, which is a distribution pattern. Usually after 3 drives patterns, you'll see market reversal. That's one confluence. Second thing you want to see is a tap into the order block. So you can see that we swept the liquidity here, this liquidity here with this candle, all these candles, and then we swept it again, all these candles with this candle. So we just keep on sweeping liquidity, and we want to tap into an order block. So we probably tapped in here. And generally what you want to do is, how I enter trades like this is that I'll zoom in into a lower time frame. Since institution you usually trade on the daily, that's where you want to identify order blocks, although you can use lower time frames. But yeah, to find an entry, so I'll see this tap into this order block. I'll go in a lower time frame, like the 5 minute. I will definitely fast forward through this on the video. Cool. So it's not absolutely perfect, but you can see that we displayed another 3 drives pattern even on a lower time frame, and then we saw market reversal. So how I would enter this trade is that I would look at this. I would see another distribution pattern on a lower time frame. You can possibly enter your position right here, or you can even wait for a break of structure. So maybe on like the 15 minute and the hourly, these would be a lower low and a higher low, or lower high, and you can probably enter on this lower high here. And that would be your entrance into this trade, and your stop loss would be set right above this order block. Since a wick past or a candle close past this order block will invalidate it. So let's go back to the daily. So that is how this order block trade played out. And if I were to give another example of how the next one might play out, is like this. So once again, we have a break of structure. We're setting lower lows and lower highs. Meanwhile, we're just sweeping all this liquidity. So all this liquidity is swept by this. Now we've created more liquidity down here. So I can see, for example, the sweeping again, and then possibly tapping into this bullish order block, and then reversing. That is a general idea. So if I were to set up this trade, I would also look for more confluences. So we have break of structure, order block, sweep of liquidity, and you can even look for a fib retracement. So we'll take the retracement tool, start from the bottom, and go up to this peak. So from this swing low to this swing high, and you can see that right here we have this golden pocket. Golden pocket is a zone between the 0.618 and the 0.65 Fibonacci zones. So if I were to draw another zone here, this golden pocket area, and I'll make the golden pocket gold. So my trade on this would look something like this. So I'll probably enter on this golden pocket into this order block while it's sweeping liquidity, and I'll put my take profit targets on probably a sweep of the liquidity right here. So once this moves up, we'll sweep this liquidity, and then possibly reversal on this bearish order block right here. So that is how to use order blocks. A lot of retail will think of a lot of these wicks down here as support, but they're really just liquidity to be taken by smart money. So that is a very important concept to really understand. And yeah, that's how you use order blocks. So yeah, if you guys enjoy this content, make sure to leave a like and a follow, and make sure to join the Discord. I'm going to start to build up a nice community there. I'll do more callouts like this. There'll be a lot more information, and yeah, it'll just be a lot of fun trading with you guys. So yeah, if you have any questions, just join the Discord, and I'll see you guys there. Cheers, thanks.